Hello and good evening, everyone. I am Abhijit, and welcome to a new episode of Investing Fool. It's been 10 days since we uploaded the last video, and from one angle, it might feel that we may have missed so much in the market, so much is happening in the market. If you employ a slightly different perspective, let's say you went on vacation and came just to do your rebalancing, then you might feel that, yeah, nothing much has changed in the market. Broadly, things are what they used to be. Right, so today being the 1st of October, we will talk about this month's September ends rebalancing. On today's video, we'll look at how the portfolio has been performing, how the stocks have been performing, how the sectors have been performing, and some general tidbits and news. I'll try to keep it short. Before moving, for those of you who are new to this channel or watching our video for the first time, we have been tracking this portfolio of 20 stocks constructed from the Nifty 500 universe. We started back in November last year, and it feels so different and amazing also that we are very close to completing 1 year of this portfolio. Anyway, if you want to be a part of this journey, then feel free to hit the subscribe button. And before we move forward to the content, just a familiar reminder that none of the stocks are recommendations or suggestions or anything. Please consult your financial advisor before making investments. I have invested my money in these stocks, but I'm not asking you to. Okay, let's get started with what has happened in the portfolio. So portfolio returns for the month of September 2024 came in around 3.85%. Our benchmark index, which is Nifty 500, the returns were also good enough, 2%. And this was after a lot of noise at the beginning of September. So all these Twitter financial experts kind of bring out facts, histories, and just show trends, right, which have been seen in the past. So one familiar trend was that September has usually been pretty negative or not so good for most investors. I typically do not know what to make of those facts. It's good for entertainment value, but we do not make any like decisions of staying in or out of the market anyway based on that. But history repeats, history rhymes, but not always. So this September actually turned out to be pretty decent for investors. At least we didn't see any any major falls or corrections or anything like that. Probably it was aided by the rate cuts coming in September, but anyway, whatever it is, September turned out to be fairly decent for most momentum investors, I would say. And so our portfolio is currently 1.5% away, more like 1.4% away from the all-time high, which we hit around the middle of September. Now, the interesting thing about this rebalancing cycle is that there are no exits in the portfolio, and obviously if there are no exits, then there are no fresh entries as well. So all stocks, all 21 stocks that are there currently remain unchanged. All our exit related metrics also remain unchanged. So win loss percentage, right, gainer loser percent, our average holding period for exited stocks, all those remains unchanged. And so what does this tell about the market? So in a way, like the clear sectoral trend that was there in some of the sectors that has kind of dissipated in some of the sectors. The names that you see on your screener are also familiar. So whenever you start seeing names on the screener, most of which like are already in your portfolio, right, then you kind of get a feeling that no new stocks are emerging. And it's not that nothing is happening in the market, right? Obviously a lot of things are happening in the market, but when you do a relative ranking of the stocks of your stock selection universe, then a lot of this short-term noise that this stock got, like this company got this deal, this stock is up like 10% on a day, this stock created a new high, all of this noise kind of gets compressed, and we only get a very filtered version of what we need for our ranking purpose. And when we get that filtered version, a lot of the noise just falls apart, and you see that, like, okay, maybe not a lot has changed, the same names are appearing again and again, right? And that's why, like, in this cycle also, in terms of, like, when we do the relative ranking, we didn't find any stocks meeting our exit criterion. So what is our exit criterion? Exit criterion is basically any stock falling beyond rank 50 on on the screener, or any stock that has fallen by more than 25% from the all-time high on the rebalancing day, right? So if none of these stocks meet the criterion, that's what happened this time basically. So none of the stocks got changed in the portfolio, and the portfolio will just remain the same until the next rebalancing, which will be in the middle of October. So in terms of the market cap distribution, large cap, small cap, everything will just remain the same. So that's the first update for this rebalancing. So for those of you who may be excited that we may be buying some new stocks, we are not, and frankly I wouldn't be happier, because as a long-term investor it helps my cause if there is no churn on the portfolio. So if there is no clear trend emerging in the market, I'm very happy to just hold whatever we are holding. We'll just continue to hold them, and then and when when the trend emerges, when some trend suggests that we should be making some changes in the portfolio, then we'll do it accordingly as per our rules. Okay, let's just take a look at the portfolio, what has happened today, and then we'll discuss a few other points. So typically in the last few weeks, what I saw that the large indices were moving quite a bit. Momentum portfolios were not moving that much. There was literally nothing happening for momentum portfolios. There were many sessions in which we were faring worse than the market. Surprisingly, yesterday, I think yesterday, because PCBL was up quite a bit, and today for some reason we have performed better than the market on a one-day basis. But for most other days in the past, like in the past 10 days, you can say, our portfolio, my portfolio, was not performing as well as the index. But it's not that it was like hugely underperforming or anything. If you look at the gap, so our absolute return pre-tax since inception is at around 47.5%, right? And Nifty 500 is at 37.9%. So there is almost a 9-10% percentage differential alpha, and that has kind of remained constant. Both things keep going up and down. I have updated the returns chart as well, so let's take a look at that. So the September returns for us are at 3.85%, index at 2.00%. Till now, from November last year, we are at 47. So we are at the end of September, we were at 47%, and index was at 37.75%, so around 9% alpha. We look at this chart. So this gap that I'm talking about, so from like almost the mid of September, this gap has kind of remained the same. Whenever the index goes down, we also go down, then we climb up together, then we come back together. So we are not creating any additional gap vis-a-vis the index. Okay, today we were up 0.24%, index was up 0.11%. Again, nothing major here. And so let's get to the third point that we discussed, that we need to discuss here, which is that Kalyan is winning the KZI race. What is the KZI race? So these are the three stocks. They are part of kind of a same cohort in terms of returns. So these are Kalyan Jewelers, Z is Zomato, and I is Inox Wind. These didn't come to the portfolio at the same time. In fact, if we see, Kalyan came into the portfolio in the middle of March. Inox came 1 month later, middle of April, and Zomato came first actually in the middle of Feb. Right, so Zomato is like 2 months elder to Inox Wind in terms of their age in our portfolio, but in terms of the return profiles, they were all hovering around the 88% mark. And then we were thinking that which of these would edge forward and which of these would fall back, right? So clearly, as per the current trend, Kalyan is winning this race. Kalyan had already gone to like 105%, so technically it kind of touched the multi-bagger territory, but it slid back. It has lost like 5% from the all-time high, while Inox Wind has lost 9% from the all-time high, and Zomato has lost close to 8% from the all-time high. But in terms of the overall returns, the net returns, Zomato and Inox Wind are firmly in the 70s, so close to 75%, while Kalyan is at 98%, right? So we just hope that Kalyan goes back to the 100 plus levels 100 plus gain levels very soon. Now about the overall market, Nifty, the large index, right? At one point we were discussing whether Nifty can sustain above 25k or not. It sustained, it crossed the 25k, and with aided by rate cuts, it easily crossed. It had a very good run, and it crossed 26k as well. Now it has slid down from 26k. We are somewhere around 25 750, and looks like a good consolidation. So let's see where we go from here. But it was in this period that a lot of the large cap stocks, the mega caps, were kind of performing, while the mid caps and small caps were kind of taking a backseat for some time, right? It could be due to FIIs investing a lot of money after the rate cut signals into emerging markets. That could be one reason why that was happening. But we'll have to see if this trend sustains, because like historically, if you see the divergence between the returns of the small cap index, mid cap index, and large cap index, they do not persist for very long periods, right? Somewhere or the other they tend to converge, right? So what happened with small caps in 2018, something like some correction like that can be kind of expected after a huge run. I'm not saying that it will happen this year or next year or the year after that, right? But somewhere the lines have to kind of match, and large caps haven't performed for quite a bit. And if a lot of foreign investors' money comes to India and other emerging markets, their preferred choice would always be stocks with extreme liquidity, which are the large cap stocks, right? So maybe nothing beyond Nifty 200 max. So maybe it's time for the large caps to perform, but we can see how this trend develops going forward. As we discussed, momentum PFs didn't perform as well in recent times, but this trend also might change. We might eke out even more alpha if the market goes again in a sustained bull run. But after so much of a good run, it's actually like personally I would say it's good for the markets to take some break, and because that helps you in the next bull run. If you rise too fast, then the chances of falling too fast are also higher. So if we look at the Nifty 50 return pre-tax from November last year, it's 30%, right? And the average Nifty return is like 12%. So there would be years like these when you would get 30% instead of 12%, and we shouldn't treat those as normal, because what comes out when we like start treating these things as normal, our expectations get skewed. And then when a correction happens, when momentum portfolios corrects by like 70-75%, right, then all those like everything will be washed away, right? So we should keep our expectations pretty clear, right? Okay, some other bits of news is that Trent got included in Nifty 50. So this I had created a post about this. We had talked about this maybe a few months ago when there was discussion, because these things come out well in advance, that stocks like Trent, BEL could come into Nifty 50 and some other stocks could get out. I had posted about that as well. But anyway, it became a reality, and now Trent is a part of Nifty 50. And because Trent is a part of Nifty 50 and it has performed so well, it will be part of our Nifty top 10 portfolio as well. So it has entered this month, so we'll probably make another video for discussing just the Nifty top 10 changes for this month. I'll make that video tomorrow. But overall, what you need to understand is that, so I would be entering, we would be entering Trent in the Nifty top 10 portfolio at this level, right? At the current market price, which is already 155% above where we entered in in our core portfolio, right? So this usually happens the smaller and smaller you go, like liquidity is one variable, then the growth that you see in some small cap stocks, the volatility that you see in some small cap stocks, that is markedly different from the larger cap stocks. So once like if your universe is different, you may like in a middle kind of universe like Nifty 500, we will often see stocks that have run like if they were recently included in Nifty 500, they were part of like smaller indices, so there they would have already run like 200%, 300%, whatever, and then they came into Nifty 500 and then we picked them up, and if the momentum continues they may continue to run forward. If not, then they fall backward and exit the portfolio, right? Okay, as per S&P Global, RBI may rate cuts from October. I'm not sure how much the impact of this will be on our market, but let's see based on the inflation targeting where we end up. Okay, now some other things. So as we talked about that there is no clear trend in terms of sectoral performance. So let's take a look at the sectoral performance, and before that let's take a look at the last 10 days of data, right? So last 10 days, you like and that same point I've written here also, that Power India and PCBL are the only clear gainers. These are the only two stocks that have inched forward in a sense. If you look at all the other stocks, like this is 100, so if this value is 100, they have not done anything. They have gone up and down. They're basically in the same range, right? Some stocks obviously have come down. Oil India has come down. Godfrey Philip has had gone down, then again came back up, and most of the stocks are the majority of the stocks are not doing anything currently in the portfolio. There is not a lot of activity. In terms of the sectoral trends, also if we look at the 1 week trend, no clear picture is emerging. Of course, Nifty Metal has gone berserk, and this is because of the China story. China has unveiled a huge stimulus, and the stock markets have rocketed, and like 24% in 10 days or whatever. And personally I feel like it's a lot of like short term movement, the kind of impact that this, because many of the problems that are with the Chinese economy are structural in nature, and I'm not sure if a band-aid like a short stimulus package can just cure things fully, right? So the kind of consumer demand that they're anticipating, it may not come. We'll have to see in the long term, but this recent surge in metal stocks and the metal index in India, I believe could be fairly short-lived, not pretty long. If we look at the 1 month change also, metal obviously here is the top performer, but there are a lot of other performers, right? PSU Bank is a clear laggard, the worst performing sector in this time period, and Realty has performed well. Pharma has not gone anywhere in the last 1 month. Auto has done really well, and auto ancillaries have also done really well. In terms of the 3 months change, this is where you see some trends that could be there for the medium term as well, right? So consumption, FMCG and pharma, these are the performing sectors. IT is also there, of course, but consumption and pharma are two like sectors which had been performing consistently for some time, and the trend seems to be dissipating or maybe consolidating a little bit in the short term. It might pick up again, right? So we have a fair bit of pharma exposure in our portfolio, and those stocks haven't gone out, right? So we have Glenmark here, we have Lupin, we have Torrent Pharma, Jubilant Pharma, Suven Pharma. So we have 5 stocks out of the 21 currently which are from the pharma sector. Let's see how the sector performs going forward. And one factor to always consider is that people are always waiting for correction. When there are so many people waiting for correction and there are so many people predicting correction, then even if a correction comes, it may not be for the reasons that those people are waiting for or pointing out कि valuation high हो गया, right? Valuation तो 2 साल से high है, right? Valuation has been high for so many years. What is the issue that the correction will happen right now? Valuation has been high for so many times. Correction can happen every time. You cannot, if you keep saying that valuation is high, correction will happen, valuation is high, correction will happen, someday you will be proved true, right? But like having that kind of opinion is not, I mean, not the point. The associated point is that there is, because a lot of people are thinking about corrections or anticipating corrections, a lot of money is still sitting on the sidelines, right? I think Parag Parikh Mutual Fund had come up with like a number, they are almost like 26% cash or something. Some other investors, marquee investors, have also said that they are sitting on like 15% or 18% cash. So when that kind of money is waiting, and the FII's money also hasn't trickled completely into EMs as of now, so any correction, in my view, for the usual reasons, may be swift. Any correction which is for wildly unanticipated reasons, right? Like this yen carry trade, which no one was talking about, right? Which came out of nowhere, or maybe like COVID, which came out of nowhere. Those kind of things can wreck the market. Things that everyone is talking about: Israel, Middle East conflict, valuations are high, US recession. For those things, I don't think there could be, like, even if there is a correction, a lot of money waiting on the sidelines might get into the market and arrest that correction, right? So we may not face very deep corrections. On the right side here, you see the chart of Power India. So you can see here Power India is at a net gain of 50%, and all of this was like a lot of this was made recently. So we entered the stock here. This green dot shows our entry point in the beginning of May. Stock went up, we were happy. Stock had huge volatility, went down almost to where we bought, right? This was in the beginning of June. We almost lost everything that we had gained on the stock on the 4th of June when the election debacle happened. Again, the market bounced back pretty quickly, and Power India made a new high. Now this was reached in the first week of July, right? And thereafter the stock started correcting a lot. No particular reason, just huge volatility. I mean, a lot of the power stocks started correcting, seeing a fair bit of consolidation, and and then it did nothing for quite a long time, right? But up until here, right, up until here, we were sitting at quite a bit of loss, almost a 10% loss, right? And there was no exit criterion was met. There was no exit signal, so we kept holding the stock. And then it started going high. It tested kind of this level, and then again fell back, and then again created a new high, and this time it crossed its new high. Now I don't know whether it will sustain above this high or not, but this is in general a very bullish trend for the stock. And recently there was a report by Morgan Stanley as well, which said that power stocks should do well. I mean, of course, that's not the basis for us buying into these stocks, but the sector as a whole might get some bullish sentiment based on such analyst reports, right? So anyway, let's see where Power India goes from here. Another stock that had slid down a bit and has recovered somewhat. So today it was Dixon. Cummins was also up 2.07% today. Okay, let's look at three of the stocks which were very close to getting kicked out of the portfolio. These are Torrent Power, Cummins India, and Oil India. So Torrent Power we bought in the middle of April. Cummins we bought on the same day. If we look at the charts, Torrent Power has like huge like ups and downs. Although the long-term trend looks like this straight line that is taking it forward. So this chart still looks like the best of this lot, but it was pretty close to exiting because of the worst strength held criterion. So it was ranked I guess 46 or something when I checked on yesterday, and because of that it still had not reached 50, so we just let it stay. Similarly, Cummins India was ranked I think 42 or 43 and it had not breached the 50 rank, so we let it stay. But if you compare these two charts, right, the entry date is same for both of these, and for Torrent Power, like different stocks can have different trajectories. They could end up in the long term at around the same mark. So if you look at where we started in Torrent Power, it like lost so much ground very quickly, right? And this was a fresh position, and then it's again started rising a bit. Again, you were close to around 0% here. Then again it corrected a bit, right? It rose almost like 13% or something. I had created a post this day, and then again it lost almost all of it, right? And again now it has created a new high. Versus compare it with Cummins India, right? Huge gain from the beginning, so you feel very positive about the stock. You have just taken it and it has shown a huge gain, then huge correction, again recovered all of those gains, but then a correction and slight recovery, and then has not gone anywhere for the past couple of months. The past couple of months Cummins is literally doing nothing. If you look at both the stocks, right, Torrent Power and Cummins India bought on the same day, one is at 22%, one is at 28%, and this is also because Cummins was 2.1% up today and Torrent Power was down 0.5%, but broadly they are both at the same place, right? Oil India is a different case. Oil India would have gotten exited because it had fallen by more than 25% from the all-time high, but on the closing on September 30th, when I'm doing the rebalancing, when I checked it, it wasn't actually like it hadn't fallen more than 25%. But if you look at the momentum is definitely broken, but it has not given a clear signal that that it should be taken out of the portfolio. So it has corrected a fair bit, and then for the past many weeks it has actually not gone anywhere. Like from I guess the first week of September, it has been just hovering around the same range. So but anyway, if these three stocks had gone out of the portfolio, then what other stocks could have come? So these three stocks could have come, and as you can see, two of these are from the chemical space. So Himadri is one and BASF India is the next one. You can look at the returns: 162% in 1 year, 204% in 1 year. The market caps are fairly like same for both of these. RSIs are also like 79 and 74. Both of these mid caps, and the third stock, okay, I guess I have forgot to change the charts here, so that's a miss on my part, so we can just ignore this slide, but the names are Himadri, BASF and Bharti Airtel, right? These three stocks could have come into the screener. Now let's take a look at the screener once, and you can see almost all of these stocks is what we have in the portfolio currently, right? So Anantraj has come in new, but we won't take it because it's not the beta is not below 1.5, so we won't be considering it for entries. Then we have HSCL, we have BASF, but apart from that, all of these top stocks, right? Trent, Bajaj Auto, PCBL, Kalyan, Inox Wind, Power India, Colpal, Godfrey, Glenmark, Dixon, Zomato, Jubilant, all of these we have in our portfolio already, right? Motherson. So different rebalancing this time around. None of the stocks changed hands, and so we are going to continue to persist with the same portfolio till October 15, and let's see what stocks come in the next rebalancing cycle and how the market dynamics change till then. Thank you for watching, if you have watched till here, and yeah, that's it. See you in the next video. If you like this video, please hit the like button and please share your views in the comments. Thank you and have a nice day. Bye bye.